Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 12th, 2009. Well, another fun day on Wall Street, folks, as the rally continues out there, and it's on the back of a bunch of different things. First of all, the technicals can be seen to be pointing to a hit of the 20 moving average on the daily chart. We're going to briefly touch on that today. More focus on the intraday charts. What are the key levels? Why do we know where the high of the day will be today most likely, even though it is just happening as we speak? We're going to talk about that. And then we're going to discuss a couple other things on the intraday chart, but I want to first go over a little bit about what's going on today. You had some big pharma deals today. Pfizer has a new drug that looks like it's going to benefit pancreatic cancer players out there or victims out there, and that's a big deal, obviously. They stopped the trial early. Now, usually when they stop a trial early, it's because you have a a drug that's hurting people. But in this case, it was so good that the people that were getting the placebo, they wanted to rush them and get them the drug so they could, sustain and get better and improve their life as well. So, phenomenal Pfizer news. Genentech, DNA, symbol DNA, getting fully bought out. A lot of pharma news out there, folks. In addition, Bernie Madoff pleading guilty today and getting sent to jail while he awaits sentencing. I believe that's June 16th sentencing. So the market has a lot of things to be jubilant about. There was some retail numbers, which actually some of the numbers, the economic news that was out this morning, got revised better than expected, and that giving the market a little bit of a heads up. Now, notice this on the chart, guys. There's a reason why you just hit the high of the day today, and in my opinion, that's major resistance. I will touch on that, and we're going to go over it. But first, let's talk a little bit about what's in this chart. Now, yesterday you saw a nice push up early and pretty much a sell-off all day. Then you broke out of a channel, and I'm going to draw these in as best I can. This channel is very key for today as well, okay? Connecting this to these points all the way down, and you can see later in the day it broke out, and then look what happened this morning. We actually came in pretty much opening flat on the day and came right in, pierced that support line, and then as soon as you hit that channel, and by the way, why I'm calling it a channel is because of this. Alright, yesterday you were definitely, no doubt about it, in a channel, and once you broke out of that channel, that's a big-time breakout intraday. So you fell back into the close on profit taking. This morning you saw a little additional, but as soon as you hit that right area right here on this lower channel, this upper part of the channel from yesterday, the market got a big bid and rally started up. Now, a couple key levels to watch. Number one, you want to draw your key trend line analysis levels in. There's a key one, and why do you think that's key? Well, look at where this market came back to after it broke up. Look at where the one red candle on this chart is. It's right at that point, so obviously that's a big level. In addition, you can look at this area of resistance yesterday. All right, see how the bars kind of made tails, and kind of traded sideways here after that initial push up before failing and moving down. Well, you want to really take that level and just draw it right across, and obviously you're going to get anywhere between these two bars the highs of the day on the initial push. That's right where that initial push came in, right before you consolidated right back to this trend line, and then you burst higher. Now, on the 60-minute chart, there's a reason why the market faltered here, and another reason why the market faltered here. All right, and these are all key things that you have to be aware of, and you can't even see them necessarily on this chart. Although, what I do want to show you guys is it looks to me like there's another channel coming to fruition here. If you take the low here and just connect it to the first pivot point before a move up on the chart, you have a new channel developing, and I'm trying to find the other point. I'm actually doing this live as we talk, and it's a little tough, no doubt about it. But it looks like somewhere in this range, all right? Somewhere in this range coming here. You can see you're getting hit up here and then hit up here again. And it does look like that's something to watch as well. And there you go. There you go, folks. I can connect it just from this point to the high point pivot before the pullback, just like we connect this from the low to the first pivot of the day. And you can virtually see you have these parallel line. Now, we haven't really tested the upper range of that, as this is a very steep move in the market. But what I want to more concentrate on with you guys is how do you know this point is important, and how do you know this point is important? For this first point, what we're going to do is look at the 60-minute chart. So let's flip over to that, okay? On the 60-minute chart, the key of that initial move has to be looked at as part of yesterday's high, but in fact, going back to the 2nd of March, you have a gap window right here, all right? So you really want to focus in on that and then gap fill. Now, gap window came into play right here, all right? This is obviously a big level. See how you went up to here, and then we came up below it, then gapped above it, and then pulled back. But the point here is this. Look at your gap fill. Extend that, and you're going to see that virtually it comes right into play right at that pivot point this morning on your 60-minute. See this first candle right here, that one with a little bit of a wick on the top that closed in the lower sections? That's that pullback that we're seeing on this chart right here, showing up on the 60-minute. And you can see how you went right up into that. This is gap fill. And really yesterday you tested it, but you didn't get quite into that gap fill. But nonetheless, today was the gap fill, and you pulled back, and then you started to rally, and you've rallied higher. It's actually been a very, very nice rally in this market. The key here is this, guys. Why did you go higher? Why are you retesting these highs? Why are you at this higher point, which is right up here? And to look at that, you need to go to the daily, and I'm going to briefly show this on the daily. All right, and the one thing you want to know is November lows are resistance points. All right, so that's intraday. This should be a very significant resistance point on this chart, and we're going to extend that line right over, and look at that, folks. All right, right into that point. So you're at November lows. Remember, November lows were support when we initially came down right here. Then we broke, and now on the upside is resistance. In addition, you got the 20 moving average there, so that's interesting as well. All right, going back to the intraday 10-minute, though, I really want to look at oil today. Oil's an interesting chart. You've had a nice rally on oil later in the day. Really, since this market broke up to those November lows, you started to rally up very significantly, but look at what you're hitting here. There is resistance here. There is pretty good resistance. Why? Because you have the 200 moving average here. In addition, you have resistance right here. All right, these are all resistance lines all the way over here, which is key in the charts right now. So you have this point and the 200 moving average as playing good resistance in this market. So on oil, there should be a little bit of consolidation pullback on that, at least in the near term. But a very nice move on the USO today, intraday. Goldman Sachs today, not that strong. Goldman's only up $1.90 when the markets are up pretty significantly. And just to mention, guys, the Dow is up 153 points. The NASDAQ is up about 29 points. I have the ES futures up about 18, crude oil up 3 on the day right now. And these, again, these are midday numbers. We're just a little after 1 p.m. Eastern time here. But nonetheless, you're watching that November, this high right here. I'm going to go back to the SPY 10-minute. Watch this level right up here. Anywhere between these lines up here should be a very good resistance point by the end of the day. We'll see if we pull back anywhere in these lines. You could go a little higher as it's a little ambiguous up here, but right in this range, you start to come into some pretty significant resistance points that you need to watch. All right, that's on an intraday basis. Obviously, in the nightly videos in the Research Center for my premium and elite subscribers, we really delve into what we're expecting tomorrow, what's the projections, what are we possibly buying as a swing trade and so forth, what am I accumulating and so forth, or shorting and vice versa. That's really what we delve into on the nightly videos, get into the hardcore nitty-gritty about the markets. I just gloss over things in these videos for the most part to give you guys a general sense of the technicals we use. We don't use stochastics, we don't use RSI, we don't care about those technicals. We're trendline analysis players, we're price pattern and timing players. Alright, this is something we called out in the intraday stock chat. We said off of this move up, this is a bullish flag pattern. You got to know your flag patterns. And what happens? Market boom to new highs. It's just knowing your patterns, putting the odds in your favor, and profiting off of that. You can do that. You're going to be in a very, very good shape and be profitable and be one of the elite traders. Very rare out there to be one of those. And I do encourage you all to join the Research Center with the intraday stock chat. And our webinar, by the way, our webinar where we teach our proprietary stuff too, is coming up on March 21st, 1 p.m. to 6 p.m. 5-hour intensive course. You can do it from your home computer, your office computer. You will see all our slides on your computer and talk live to your instructor. Alright guys, take care. Have a wonderful day. Keep an eye on this market up at these levels. There should be some resistance up here. We'll talk to you soon. Take care.